Welcome, everyone. In this discussion, brought to you with insights from the experts at Pro Tax Accountant, we're going to break down some huge inheritance tax changes hitting the UK. Seriously, if you have assets you're hoping to pass on, you will definitely want to pay close attention.
And this is a really important question to be asking right now. Why? Because with these major new rules landing in April 2025, a lot of families could be facing some pretty big, unexpected tax bills. So yeah, understanding what's going on now is absolutely crucial.
All right, let's get right into it. We're about to cover the very core of these changes, and believe me, it's a massive shift in how inheritance tax, IHT, is going to be calculated here in the UK.
So what's the big idea? Well, the UK is basically throwing out the old, kind of complicated domicile system. Instead, we're moving to a new residence-based system, and it's pretty straightforward. If you've lived in the UK for 10 of the last 20 years, your entire worldwide estate is now on the table for UK inheritance tax. That's a huge deal.
So as you can see here, we're moving away from that fuzzy concept of domicile to what is essentially a simple residency clock. You live here long enough, your worldwide assets are in scope. Simple as that. But check out that last point. That new 10-year tail is a big one. It means your estate could still be on the hook for UK tax for a full decade after you've packed up and left.
Okay, these 4 points right here, this is basically the engine of the new system. You've got that 10-year residency test and the 10-year tail we just talked about. But look, trusts that hold non-UK assets are also in the crosshairs now. And the kicker? The tax-free thresholds are frozen solid. With inflation and property prices going up, this is quietly dragging more and more people into the inheritance tax net every single year.
So the big question is, what does this actually mean for you, for your wallet? Who's going to feel the pinch the most from all this? Let's break down how these changes are really going to hit specific groups.
And this right here, we're hearing this a lot lately. It's a genuine worry for family farmers and business owners across the country. And it's mostly because of a brand new cap that's being put on a really, really important tax relief.
£1 million. This is the number you need to remember. Starting in April 2026, there's a new £1 million cap on both agricultural and business property relief. Now, this relief used to be unlimited, which meant, whole family farms or businesses could often be passed down completely tax-free. Well, that unlimited protection, it's gone.
Let's put some real numbers on this. Look at this scenario for Sarah's family farm valued at $1.5 million. Right now, before the changes, the whole thing could pass to her son with a zero tax bill. Simple. But after April 2026, only the first million gets that 100% relief. That leaves $500,000 just sitting there, exposed to tax, creating a £100,000 bill pretty much out of thin air.
And hey, it's not just business owners who need to pay attention. Think about it. The tax-free allowances, those nil rate bands, they haven't budged since 2009. In that time, property values have just skyrocketed. So what's happening? More and more regular homeowners are finding their estates are suddenly crossing that threshold and are now on the hook for inheritance tax.
Okay, so knowing the rules is one thing, right? That's half the battle. The other half is figuring out what you can actually do about it. So let's talk about some strategies for planning ahead to protect your estate.
If you want to get a quick idea of where you stand, it's a pretty simple 5-step check. First, you list all your assets. And remember, that includes non-UK stuff now. Then, you subtract your debts, like mortgages. Apply any reliefs you might be eligible for. Compare that to the tax-free thresholds. And whatever's left over, that's what could be facing a hefty 40% tax bill.
Now for some good news. Gifting allowances are still around, and they are powerful tools for shrinking the value of your estate over time. You've still got your £3,000 annual exemption, those small £250 gifts, and of course, the big one, the 7-year rule. Any larger gifts you make are completely tax-free as long as you live for 7 years after you've made them.
Okay, for business owners, the key takeaway here is you've got to be proactive. This could mean gifting shares early to start that 7-year clock, or maybe restructuring ownership to make sure you're using that new £1 million cap for each person involved. Trusts are also an option, but, and this is a big but, you have to watch out for capital gains tax, or CGT. Sometimes gifting an asset can trigger an immediate tax bill, so you really have to weigh your options carefully.
And if you've got assets outside the UK, this is absolutely crucial. The bottom line is, if you pass that 10-year residency test, that holiday home you have in Spain, or maybe that investment portfolio in the US, it's now very likely part of your UK estate for IHT purposes. It is so important to get those assets looked at right away.
All right, so we've covered a lot. How do you pull all this together? What are the actual concrete steps you can take to feel confident and really take control of your financial legacy?
So let's do a quick recap of the big takeaways. First, residency is the new rule of the game. Forget domicile. Second, for business owners, that £1 million relief cap is a total game changer. You have to plan now. Third, gifting is still one of your most powerful strategies. And finally, and this is maybe the most important point, with how complex this all is, getting proper professional advice isn't just a good idea, it's essential.
Look, as we've just seen, this stuff can get really complicated fast. Getting advice that's tailored specifically to you and your situation is the only way to navigate these new rules properly. And that's exactly why the experts at ProTax Accountant are there, to provide that kind of specialist guidance.
So we'll leave you with this one final thought. With these kinds of huge changes coming down the pike, planning ahead isn't just a smart thing to do anymore, it's absolutely essential. So the real question for you is, what's your first step going to be?